There we go.
Cool.
Nice. We've got a couple of new names this week's Zoom. Welcome to everybody.
Awesome. And as we were saying, we normally have these on Thursdays, and we usually have between 10 and 20 people on the line, but I think we've just been moving things around this week as we've been opening up the garden. So Friday afternoon, we understand that there's probably a lot of other competing activities. So we're just gonna roll into this and we'll post the recording. So I think we could probably kick it off. Maybe Bandito. So I would love to start by introducing you. I think a lot of people unfortunately know my face, but this is their opportunity to get to know you. So maybe just start, who you are, where you are, and just a little background of you and crypto.
Okay, I can do that. Hey, everybody here at the Crypto Garden. My name is Bandito. I currently live in the Great White North in Canada, but I spend a lot of time in different parts of the world. I'm never really stationary. I've been in the crypto space for a couple of years now, and I started off as an investor and then worked my way into trading slowly but steadily. And just happy to be here, fascinated by the space, and happy to be here with you all.
And Bandito is very modest, but she, in my eyes, is a rock star here in the garden. She's been doing weekly topical conversations where she does a lot of research into the background behind different projects. And so every time we get on the line with Bandito, I'm always learning something new. And yeah, I think you're one of the people I've learned the most from, I think, in the last couple months since we've met. So it's great to have you here to talk about the topic of staying calm in a bull market. And so the first part that I wanted to just kind of dig into is, are we in a bull market, right? Because the funny thing about the cryptoverse is that sentiments change so quickly. And it was only a few weeks ago that we were really watching with bated breath to see if we were going up or down. And now we've put in a few green weeks. I wanted to just kind of start off looking at this, looking at some charts just to kind of see where we're at least where Bitcoin is concerned. Get this out of the way here. And so as we know, Bitcoin is the king, and so prices follow Bitcoin. So whether you are looking at altcoins or Ethereum or whatever it may be, this BTC chart is really the one that we're all paying attention to the most. Bitcoin dominance has been on the rise, and when that happens, the gravitational pull of this price action is really what dictates whether we're going to go back into, we can call it a bull run, we can call it a markup phase, whatever you want to call it. It means more green candles, more opportunities to buy, and maybe more opportunities to FOMO in. So we're going to talk about some of the strategies that myself and Bandito employ to just keep a calm head and to participate in this market kind of sanely. So, looks like I turned on my drawings here. I wanted to just kind of look at a couple things here. So, and I didn't know this was going to turn on all my drawings, but I'm drawing a fib retracement right now on the Bitcoin price chart from the all-time high here in April down to that swing low where we got to 29,000-ish on the 19th of May, 18th and 19th of May. And so this green zone, this is the Fibonacci golden pocket. And this is a really important place to pay attention to when we're looking to actually break through resistance and get back to big moves to the upside. And this is on a very long time frame. We can look at smaller fib retracements as well, where we've already started to break up. But I just want to point out that we're just about getting into this interesting zone where if we can get through these levels, the 618, the 702, find support above them, it's a pretty good indicator that we are likely to have another big move to the upside. So personally, I'm not willing to throw my hat in the ring and say for sure that we're in a bull phase again. But compared to where we were earlier, where we were, hovering around these, $30,000 prices, we have been on this climb. And you can see the other set of drawings here is the Wyckoff schematic overlaid over the chart. And we are pretty miraculously, once again, almost drawing the textbook diagram. We're in this sign of strength or show of strength, where we have gotten back up above this initial trading range and we're bouncing, and we're already starting to put in some big candles to the upside. So it is looking very positive. It is looking more and more like we might see more of these days of just chaos and things moving by, 10, 20% or more in some cases. And so with that possible future, Bandito, I'd love to know, as far as your planning goes, what are some of the key elements that you are considering when you are looking to really re-engage and go into hardcore trading mode potentially?
Yeah, thanks for that, Ryan. I would say that the backbone of my approach to any sort of market volatility is to have a plan. You need to have a plan, and then you need to execute the plan. That's very simple. There's a lot more steps within that, but that is the absolute backbone. Ideally, we'd like to have a plan in place or a strategy in place before the market starts to move, so that we can enter that moment of volatility, that uptrend, or even that downtrend comfortably. It'll help us be proactive rather than reactive to what's going on, and make our decisions based on, what we have planned, rather than making impulsive decisions based on fear and FOMO. Yeah.
Mm-hmm. So for you, when you're actually thinking about making a plan, what do you do? Do you sit down with a piece of paper and you write down your intentions and your goals, or maybe your price targets? How do you think through that planning?
Yeah, first off, you need to take a look at your own portfolio or your own finances. And I would suggest one key thing is for everyone to grab a journal. When I first started out in this space, I had just a regular old journal, and I had few plays in the market, so I could keep track of them really easily. But I used it just to keep track of the market sentiment in general, things I was learning, coins and projects I was interested in. So I would say, grab a journal and start writing stuff down. And from there, you can start looking at your goals. So in order to make a plan, you need to look at your portfolio and say, well, what are my goals? Where am I going? Like, am I starting off from a place where perhaps I have a lot of capital and I just want to invest that capital with a better APY, a better interest rate than I can get at a bank? Okay, if that's my goal, maybe I'll want to employ a strategy of, some safer, engaging some stable coins or some large caps. And maybe my goal is to, maybe I have less capital to start, and my goal is to build capital, and I want to use the market volatility of the crypto space in order to grow my capital quickly, which is one of the benefits of the crypto space. So in that instance, I may use things like the smaller caps, or shit coins, as they are sometimes referred to. So that can be one strategy. But first, before you build your strategy, you need to know what your goals are. And so that's where we start.
Yeah, it's interesting. When I think back to the beginning of 2021, I feel like my goals were really simple, and they were based on the narratives that I was hearing in the space, where I had in my mind these price targets of 220 by June or whatever it might have been. And so I was kind of doing this very simple monkey math of where can I pull money, how can I put it into Bitcoin, and just calculating what that would be if it went from 35 or 40K up to 220. And so I think initially my planning was flawed in that I was just looking at purely a short-term large realization towards a goal that I didn't even have a real grounding in whether or not it would be possible. And as we all know, we never got there. We got to 60K and the market turned around. And I think had I stuck to my longer term plan, which is what I really thought when I was getting into this market, that I was just going to buy and hold Bitcoin, like that was my plan. I think that that would have smoothed out a lot of the day-to-day stress and worry about whether or not we we're getting to the 220. So I appreciate your sentiment, because I have talked to different people, friends of mine. Some are business owners, and they're sitting on, in some cases, hundreds of thousands of dollars of PPE money that the government just gave them. And they're like, what do I do with this? It's just sitting in a bank account. And so some of those ideas of, perhaps buying stable coins that just earn a percent yield, or, buying these sort of blue chip coins and just holding onto them for the long term, that might make a lot more sense if you're really trying to put those types of assets into the market, versus, like you're talking about, if you have a small stack to begin with and you're really trying to look to grow that or grow your investing portfolio, you might have smaller amounts and have a larger appetite for risk. So maybe as a segue, can you talk a little bit about how you, in your planning and your thinking, differentiate between the risk of, say, a Bitcoin versus the risk of a shitcoin or a low cap or something that you might not really know a lot about, but it just moved by 50% and oh my gosh, chase it kind of thing?
For sure. Well, you need to do your research. That's standard. Anything that you invest in, you need to go and you need to read up on the project. You need to look at the market capitalization. You need to do a fundamental analysis of any of these projects that you want to get involved in. Otherwise, you're just shooting at the wind and hoping that you get lucky, which has worked for some people before, but better to do your research. That's what I always do anyway.
Yeah, and I think as a rule of thumb, unless you are an experienced trader, the higher up in the market cap, like if you go to CoinGecko or any of those coin tracking sites and look at the coins ranked by market cap, anything that's in that top 5 is considered less risky over a long term than anything that's going to be below that. So I know my planning has really changed since we've left the alt season frenzy and everyone just talking about alt season, the opportunities there, and getting back again to just looking at what has the best chance of holding value and growing in value over the long term. And even if we're getting into a bull market cycle, potentially a markup phase, it's less important to me than how long that lasts or what those ups and downs look like if I'm focused on those coins that I was talking to Ben Cohen earlier in the week, and he kept saying, Bitcoin has always bailed people out. Like, even if you buy at a market cycle top, even if you buy at the wrong time, over time, Bitcoin will eventually bail you out. It always has so far. And that's a very different strategy than, chasing the little micro caps that go to, 1,000% gains, then back to zero and might never come back up. So yeah,
Yeah,
it isn't. Yeah, go ahead.
for sure. When I got into the space, I heard about it and I bought into some of the basically just Bitcoin and Ethereum before I knew, wanting to enter into that market so I can get in early and then have the potential to grow. That's how I entered in. I learned as I went and realized the power of this space and these 2 coins in particular, and looked at the projects and just thought, okay, these are a pretty safe bet. This is how I'll get myself into the market. I'll learn from them. So I didn't even enter with intention to trade. Or expect to make any trades on it, just to hold for now until I learned about it.
Yeah. I know, because we were talking before this and you were kind of sharing some of your notes, you make a plan for each asset you hold. And even if that's only 1 or 2, what kind of places are you looking at if it is a markup phase to potentially start, DCAing, dollar cost averaging out, or taking profits? What does your strategy look like for realizing profit if you are in an uptrend?
Yeah, that's one of the big important parts of this plan, is to have a basically a different strategy for every single coin or asset that we hold. We have to have them as a spreadsheet works really good. A lot of folks use an Excel spreadsheet, and from there we can list or we can triage. This is what I do. I triage my coins. So I'll have some that are longer term plays, say, for instance, say Bitcoin or Ethereum, stuff that I want to hold long term. They'll be down lower to the bottom of my spreadsheet. And up top will be, say, something I got caught holding the bag on the last market cycle. And I would like to keep that at the forefront and get rid of that bag as soon as I can. So as soon as the market comes back up to at least the price that I paid, I want to have that in triage ready to sell. So let's just take a look at an Excel spreadsheet. I'll just share my screen here. You guys can get these spreadsheets anywhere online. I think these ones are called crypto sheets. Or if you are good with Excel, you can just do one on your own. Okay, let's go over here. So what these look like, and these really help to keep you organized. I very much suggest using these. So you'll input basic information like when you open the trade, when you close the trade. All of these don't have to be filled out at any given time. So just opening, closing. This here is the market, what coin we're talking about. So here's where you list each asset, each coin individually, and it's how we'll keep track and keep you organized. If you're good at technical analysis, or if you're good at trading, if that's something that you do and you're familiar with this terminology, go ahead, feel free to use it. Otherwise, you can just say I FOMO'd in here. This is your setup or whatever else. This is the direction of your play. So whether you're longing or shorting, whether you're betting that the market is going to go up or down with that asset. Here we have our entry price, what you paid, our target price. And to find our target prices, we may need to have a friend that's into technical analysis that can advise us, or be a part of a Discord group, for instance, where we can glean some TA information on targets. Otherwise, you could just leave this empty, but you could say, for instance, that you'd want it to 1x or 2x or whatever it is. Just put a target in here, and then the exit price is the actual realized price that you sold it at. Here you can add the volume, so the how many of the coins that you purchased, and here we have our losses and our profits realized. Here in this bar, we can add any fees that we paid to subtract from our net, or to subtract from our gross, excuse me, gains. And then here we can add any notes, which are really helpful too. So how that trade went for you, and what happened to actually give you a loss or a profit. Stuff that can help you in the future. Pretty awesome, hey, Ron?
Yeah, and it's I might try and dig out the spreadsheet that I made, because it's interesting. I think a couple of things that you've said so far, having a trade journal, even if it's just a note on your phone, I think that is super important. It really keeps you honest before you hit that buy button or before you hit that sell button, which is something that, to be honest, I do far too easily. Like, I know all these things, I know all these kind of principles, and I generally have a plan, but it's so easy to just have an impulsive moment where you're like, oh, I should really catch this. And you just hit the button, versus just having some kind of a running log where you can, slow down, you can write down, the date, what the coin or project is that you're looking at, and then the reasons why you feel it's a good time. So you talked about the setup. It might not even be technicals. It might just be keeping track, almost like a diary, of why you are, making that decision in that moment and documenting it. And those are really helpful to go back and look at, especially if you find yourself making mistakes or doing things where, 20 minutes later, you're like, I shouldn't have done that. You can kind of log that stuff too. So that is super important. And then what's interesting is the sheet that you just shared is a really great tool. I think if you are, if you're keeping track of a lot of trades that you have ongoing, that looks like for someone who is day trading or swing trading on, maybe daily or weekly timeframes, having those targets and everything thought out ahead is key to successful trading. There's also the opportunity, I think, to just keep things organized in a spreadsheet that has just a little bit more detail than what you'll get from your crypto wallet if you're using, I don't know, crypto.com or Coinbase or whatever it might be, where you can put in, your own buy prices and set those kind of more generalized targets of saying, I'm going to take, and people have different formulas, but maybe it's, I'm going to take 20% out when it goes up by 50%, or I'm going to start taking, Pete, if you're on the line, you have kind of a cool formula. I know you call it like the granny formula or something like that. So that's something that I've tried to do in this past cycle before things dropped, is to just say, you know what, I'm buying this here, but I know that I'm going to take out 20% or whatever when it gets to this fib level or this preset target zone. But I think the important part is, regardless of what style investor or trader, is just that you're keeping track of your decisions, why you're making them, and you're thinking into the future of when you would sell it. And maybe you're just putting on your spreadsheet, I'm never going to sell this. I'm keeping it forever. This is what I'm going to hand down to my kids. But that level of discipline over time, I think, changes it from just a game on your phone to actually like a thought through investment strategy. Yeah. So when you are executing your plan, and I guess, I just said those things, but what is your general rule of thumb as far as the percentages? And if you were just buying in and you think you're in an uptrend, you were talking about the rule of 72. Are there some different ways that you are looking at just, prices that help you determine kind of the simplified take profit points?
Yeah, for sure. And I think we need to reinforce that taking profits it's a big part of, a solid plan. Yeah, a long-term plan in the crypto space. And a lot of folks will say it, and most of us, pretty much everybody I know, had to learn the hard way. So just make sure that you're solid with taking profits. A lot of folks say, yeah, around the 20-25% is a good place to start. I have on the rule of 72, I can share my screen here. I have a little sheet here to show about that. So the general idea with the rule of 72 is that rather than holding on to one trade, hoping that it's going to, 10x or 5x or even just double, we can actually see greater gains over time if we take regular profits at around the 20-25% say mark. And that's what this is all about. It's like this graph will show you, hey, if I had $10,000, I took a 24% gain, and then you reinvest your profits on top of that over a few plays of 24%. You end up almost doubling your money rather than sitting on one play for who knows how long, and maybe, ending up on the wrong side of the market with that bag before you've actually realized profits. So I usually start about the 20-25% mark. And depending on the coin, it really depends on your asset. That's why we need to have an item list of our coins and when we'll start taking profits. It doesn't have to just be at 20-25%. You can take it at 20%. You can take again at 50%. And then if your coin keeps going up, you can continue to take profits.
Yeah, and it's funny. I'm realizing while you're speaking that you are a great example of, and I think I said this earlier, but just to reiterate, you're a trader. So you're doing this. I'm assuming almost every day you've got some form of trade happening. Is that an accurate statement?
For sure. I would consider myself an investor and a trader.
Yeah. So a lot of what we've been talking about has sort of been blending the two, trading and investing, and not knowing the people that are listening, not knowing what their actual approach is to the market. I just want to reiterate for those that are listening that some of these things might apply to you because you are trading and it's great advice. Some of them might be a few steps beyond where you're at or even ever want to go. And so I guess, do you have then kind of a complementary strategy that you would recommend for investing, or just the way that you plan your investments as opposed to kind of the shorter time frame trades, just to kind of round out the differences?
For sure. It would go back to the less risk that we were talking about. It come back to our risk tolerance and our risk tolerance strategy that we talked about at the start, entering into trades that are less volatile, into coins that are well established, maybe have a larger market cap, have been around for a number of years, and or stable coins even, to start to get you in the market. Trading your fiat for a stable coin, for example, and then lending that out at whatever rate, it goes up from 5% up to, I don't know, usually between 5 and 10%.
Yeah, which is pretty amazing. And I was looking at a new bank account the other day, and they were advertising it was a high yield savings account that was earning 0.67% interest. Wow. And that was high yield. And that was, once you had, I think, even 10 grand in that account, it went down to like 0.25%. So even with just a stable coin play, there are some pretty amazing opportunities to just store your value in a better place and see much higher returns than the traditional financial system. Hopefully regulation doesn't come and mess that up as well. But if I can maybe summarize the different things that we've talked about here. So again, I was talking to some folks that had a ton of cash, no crypto knowledge, no desire to trade. And they're just like, hey, what do I do? And one thing I should say is, we're not giving financial advice here. I think we're just sharing our insights and experiences. So this is not saying that this is what you or anyone should do. But one option, if you are new to crypto, you don't want to have the risk of the volatility, et cetera, is to find a platform. I've used, what's it called? A BlockFi, just to go and just buy USDC, a USD stablecoin. It's pegged to the dollar. So regardless of whether Bitcoin's going up or down, it's just a dollar in is a dollar in that account. And it can be earning like 8.6% interest. And so in my mind, that's like the easiest way that you can just get into crypto, start earning some gains that aren't even tied to the market. And that's like super, super simple. The investing is finding these projects that are low risk, that have a history of growth, and just, over time, putting more of your value into those projects with that assumption and that just historical record of their going up over time. So that's the story of, Bitcoin has always bailed people out. Even if you bought at the market cycle top in 2018, you're still up on that investment, so long as you don't panic sell. And then there's that next echelon of people that are really actively working this market to make, percentage gains day in and day out, and, putting a lot of time and energy there. And so that's a place where you've really got to be disciplined. You've got to be planning every one of these, documenting everything that you're trading. And so just trying to tease out those three kind of concepts that we're circling around, and just recognizing that Bandito is speaking from a trader perspective here more often than not. So let's pivot then a little bit into what I think is even the more interesting aspect of all this, is how do you take care of yourself? How do you stay mentally well in a market that can be very volatile for your emotions? And let's just start with your experience as a trader, actually in the weeds day to day. What do you do to kind of prepare or focus on your self-care when things are really taking up a lot of your time and attention?
Yeah, that's a really good point, Ryan. So self-care is absolutely critical in this space. We all know that spending our days on the computer and not eating well does not make us feel well. And even though I'm in the crypto space and I trade, I also work in another space, like in the real world, in the mountains, and as an athlete. And in that space, we really focus a lot on our performance, and that is super key. Is not just our mental performance, but our physical performance, and the two go hand in hand. So the way that I approach trading is the same way that I approach my athleticism in the mountains. And that is, you got to take care of things like, make sure that you're getting good sleep. I know when it comes to a bull market run, we end up not sleeping as much or keeping strange hours up all day and night. But as a whole, we like to just really take care of our bodies. Make sure that you eat and take moments to, like, simple things like take a shower, go outside, and just take a few breaths, play with your dog, play with your kids, when you're in the middle of trading and things are stressful, or even if you just have some investments and you're not actively day-to-day trading, but we're in a period of market volatility, disconnecting for just a minute and reconnecting with your body and some good food, some water can really help your performance.
How do you handle the stress or anxiety when things are going the wrong way, or you're losing trades, or do you ever get, I don't know, self-critical, or do you ever kind of have those stressful moments?
I do. And I think the longer that we are all in the crypto space, we'll have to go through more and more of these market cycles. We'll become more familiar with them. And hopefully, if we have our journals and we can be self-reflective every market cycle, try and get better and more refined at our process, those wild swings will get less and less over time.
Mm-hmm. And it's kind of fun. I mean, just also recognizing the differences person to person. As I hear you talk and see you as an athlete that you are. And so when you come to the table and you talk about trading, it's sort of like you're coming and talking about the, activities that you train for. And it's interesting that, just to be perfectly honest, when I was really getting deep into this crypto trading space earlier this year, I could see how my thinking it was going to be easy and something I could just do a few minutes a day, I was spending more and more and then more time kind of tied to these things. When you have active trades that are open, it's with you all the time. It's in your mind all the time. It's in your pocket all the time. And I personally made that choice that was a different lifestyle than I had the bandwidth for. And so I actually kind of took some steps back and said, you know what, I'm just going to focus on, well, to be honest, I really focused on my health, my well-being, and then coming back to the market more as an investor. So it's just my way of saying that if you are an athlete, there are other athletes like Bandito who can, share that experience, share the regimes and the, mindsets that work. And then there's also people that are happy being just involved enough to feel like you are doing better things with your money than leaving it in the bank, but also disconnecting from the impulse to become a trader. And one of the things that I've been telling people is, if we actually saw Bandito and her trades, I guarantee you she's not sitting on Coinbase, watching YouTubers and saying, oh, I'm going to pick this up. Oh, okay, I'm going to sell this. That kind of consumer app is not the right place to be doing that type of, buying and selling. And so you just have to know where you're at and know that it's kind of a slippery slope to start over trading or making some mistakes because you've got that buy and sell button in Coinbase or wherever. But yeah, again, it's just sort of my way of saying that the way that I'm staying calm in this bull run, if it continues, is that I care a lot less about this bull run if it continues. Whereas earlier in the year, I was very tied to, the price on the day to day, because I was looking at, oh, this is going to 220. I'm going to, cash out and get this huge gain. Instead, I'm just putting my money into these projects that I believe in, and then I don't have to worry about any of it. Right. I'm looking at on the year charts, whereas Bandito's probably looking at the 5-minute charts in a lot of cases. So I don't know. It's just interesting. And we talked in the beginning about making a plan. And so one of the things that I think a person can do is actually decide, how often do I want to be making a trade? Is it once a year? And I'm just going to buy once a year? Like, that's super simple. Is it, a monthly thing that you're kind of dollar cost averaging in? Are you trying to do one thing a week? Are you trying to trade, multiple times a day? And that will really set up your planning and your mindset just based on that time frame.
Yeah, for sure. I mean, you need to be really proactive for yourself here in the crypto space. If you don't have a manager managing your assets, you are managing your portfolio. So at a very bare minimum, I would suggest everyone to have their, have some kind of book that they write things down in and consult it every morning. Get up, take a look at your Excel spreadsheet or whatever it is, wherever you keep it, all of your investments all together. Take a look at them and make sure that you have a plan for whatever's happening in the market. Just take a look at it, triage all of your assets and your coins, consult, the news, see if there's anything upcoming that might affect the market. Just touch base with prices, like what happened overnight, just check your CoinGecko, stuff like that. Just get into some really simple discipline in your process.
Yeah, I think that's great advice. No matter what time scale you're looking at, is just more discipline. The more you actually double check your thinking before actually committing, the better long-term outcome you're likely to have. So yeah, I don't know, Bandito, did you have a couple other points? I know that you had an outline that you were following. Do you think that we hit them? Can we maybe even open up for some questions, or?
Yeah, let's open it up.
Awesome. Anybody on the line wanting to share a little bit about yourself and what kind of a investor / trader / onlooker you are, and maybe how you approach staying calm when things are turning green?
I'll go. I
Yeah.
literally just joined though, so hello, and I'm sorry if I missed anything earlier. Hi. Sorry, what was the question again? Like how I became an investor?
Yeah, maybe just tell us a little bit about you and how you approach the crypto market. Are you a trader? Are you trading on a daily basis? Are you just looking to invest in Bitcoin and other projects? How do you think about it?
I'm mostly just holding for long term, forever, and it goes up and down, and I usually just kind of let it be. When it goes up a lot and then it goes down a lot, I'm just like, should have sold some, like, too bad. And usually whatever goes down goes back up again. So I would describe myself as like very patient and be like overly patient, because usually there is a time where like take profits, and I don't really know what that point is, which is kind of why I'm here to see what your thoughts are.
Awesome. Yeah, and that's a great point. And I found this more and more, that in this market, I feel like there's FOMO. Everyone knows about FOMO. That's the fear of missing out. That's what gets a lot of people in. I think that the other side of that is the fear of holding on when everything is turning red, and that's the panic sell. And that can even happen sometimes 10 minutes apart. I've actually had experiences where I've bought something in the morning, and by the afternoon, I'm like almost panic selling, hitting the button because things turned around and I didn't expect it to. And so there's that fear of holding on. But the third one, I think, is the fear of cashing out. And we are given this idea from a lot of the people in this space that you have to have diamond hands. You need to just like hold on to these things forever. But then this market just becomes a black box where you throw all of your money into and you never really see anything come out of it. And so being willing to miss a high point and being willing to take that profit out, even though it's still going higher. And this happened earlier this week where I took profit in Cardano because it was back up. It was kind of back in that target zone for me. So I took some out, and I felt kind of the heat from people of, well, it's still going higher. That was a foolish move. And it's like, yeah, but I still have more in. I didn't take it all out. And now I've actually got cash. I'm going to go, take my partner out to dinner, and I might go, invest in this other project that I'm interested in. So, yeah, I think that is one of the things in this space that people kind of shame you that you should always be holding, when actually you have a lot more liquidity in your ability to, you know, catch dips in other projects if you are just kind of incrementally taking a little bit out as you're seeing those gains. So.
Yeah.
Mhm.
And I'm curious from our new member, do you check the markets every morning when you get up? Do you take a look at the price action that happened overnight? And how does that affect you?
I do, just very briefly, on, you know, the Apple kind of stock ticker. When it goes up and when it goes down, how does that affect me? Usually it's just like a minute or two of like, oh, I should have sold, or oh, I should have held, but not much beyond that. The funny story, I guess, how I got into crypto was I caught there was a crypto scam, and I think it's still going on, where people from like overseas will go on Tinder and they'll be like, hello, like new person I just met. Let me tell you about this fantastic investing opportunity. And
Wow.
it's a combination of like really getting you to trust somebody, and also like getting you to believe that they're a very successful person. So that happened to me last year in the middle of the like the presidential election, where there was a lot of turmoil, and there was also a lot of turmoil in my job. So what ended up happening was this guy, this very cute guy who I've never met in person before, was like, I will help you gain financial freedom. Just trust me and like send me a bunch of Ethereum in increasing amounts. So that's what I did. I got swindled.
Oh no,
Oh no.
Yeah,
that's
yeah,
terrible.
yeah, it was terrible. And what happened was I would buy Ethereum on Coinbase and then send it to this like sketchy Chinese wallet. And they had this like front end where you could see like an investment go up. But eventually, you know, I found out that I couldn't actually withdraw from that wallet. And I was like, oh no, I've been had.
Mhm.
At that time, when I found out that I'd been swindled, I was like, oh, there's a loss. I just lost like 60K. Like that really sucks.
Wow.
So,
I
so I
think
think,
I think sorry to interrupt you, but I think what you're talking about, the way that I did it as well, I think you're onto something there with just getting into these large market cap safer investments or safer coins, and then just holding until you learn a little bit more about the space. And that may be, you know, you said it, you're doing that now, right? That's it sounds like a good plan in place, rather than like chasing, as you said, chasing all these I don't know, offers that come your way.
And you
yeah,
know, I feel like I have a pretty, I feel like I have a good overall feeling for humans and human nature. But a good plan is trust no one, trust yourself, maybe trust your friends. But because this is a space that involves money, there are so many people looking to take advantage. And I think it's not as common knowledge as it should be that a lot of these projects, to make like an ERC20 token, a middle schooler could do it and then stand up a website and say this is, you know, the next big thing. And so part of the plan, I think, should be to just approach everything with caution and do the research, you know, do the sniff test. And it's definitely not your fault that these things, you know, that this happened to you, because it's happening to people all over the place every day. But definitely come into this place like you're in an open market square with your, you know, bag of gold hanging around your waist. You want to be keeping your hand on that. You want to be, you know, keeping your head on a swivel and sticking with the, I think, the more kind of vetted, trusted projects, and not get pickpocketed, because it will happen quickly in this space, unfortunately.
yeah, it was a very salient lesson of like on greed, at least for me, where I was like, okay, I know what it feels like to have FOMO. I know what it feels like to be in the midst of like wanting something really bad and wanting a quick buck and feeling really greedy, and also feeling very like desperate at the same time. So kind of losing all of that has put me in a mind space of like, okay, I've lost it. And like my day-to-day has actually been okay. Like I was still able to pay rent. I was very, very fortunate in that sense. But that's also kind of made me less sensitive to like the daily dips up and down. And I was also very fortunate in that when I found out that it was a scam, I still had a bunch of like Ethereum in my Coinbase account that I hadn't sent out. So like that kind of put me back in the green over time. Like the increase of the price basically was like a redemption of some sort where I'm just like, okay, I've learned my lesson.
That is an interesting thing about this space, is that if you wait long enough, depending on the projects, that's why kind of the blue chip, the top 5, top 10, over time, they can erase more mistakes than some of the lower caps. And I'm curious, I don't know, Pete, if you are in a place where you can jump on and share, but I would love to just, if you can, maybe just get a few words from you and have people kind of see and meet you, because you're someone that I've looked up to, and the man with the plan.
That was a great story, Elise. Wow, I'm glad you made it out of that. That's intense. Yeah, I mean, it's a scary spot. I definitely jumped in for greed here. I had a buddy, kind of this guy named Doc, and he was a great mentor for the space. But what you don't realize is how much time in the environment someone can have when they're giving you this advice. And so maybe you get like a text message like, buy this at this price, or some signaling or something, but you don't know all the research they're doing while you're like going about your life as a novice, So one of the things I learned is just like, if you get spread thin, like how complicated it is to move fast, And so I got caught on a couple of things, and I was like on vacation, traveling to see my mom, and the market starts dipping on her birthday, and I'm like, May 9th, right? It's my mom's birthday. I'm like, that's weird. All right. And then I'm like on the road for 2 days, and like, this isn't going good. And then, but I have like too much stuff, wallets in different spots. And it was like, this is not going to end well, And so I kind of like shrunk it a little bit. And, like cliche enough, the YouTubers were like, hurry up, shrink your accounts. The sniper, right? I love Sheldon, but he's like, get down to 3 coins, And I was just, I was late.
That's a good point, Pete. That's another great thing that you can do to prepare for a bull market, is make sure that you know your workflow inside and out.
Yeah.
Make sure that you consult your Excel spreadsheet, and you look and you see your coins that you want to get rid of first, and you make sure that as you can see the market start to move, you can get your coins onto an exchange before the network gets clogged up. Because we've all been there.
Yeah, even more just like practice, right? Like go through and like when you're in school, you got to buy books, So like kind of look at like go in and buy it, use your MetaMask wallet, and like go through and do some different stuff, buy an NFT, go through and move some stuff from different exchanges and stuff like that, just to like move around the space, because when shit hits the fan, you want to be fast, And so and effective at what you're doing, and not just I just felt like I was flailing. So
well, you know what? I'll counter that a little bit, in that I think that was a good lesson learned, because if you're in a place where your financial health is dependent on whether or not you can log in to a clogged exchange, it's probably not a good plan. And I was there too. So I'm not like, saying that was silly or anything, but I was also on those mornings where like I was overextended. I'd put too much money in, and now everyone and their brother is trying to log into BlockFi at the same time, and it's crashing while the price is crashing. Like that's where I'm at now, is I have vowed I'm not going to be in that place again. And I'm only putting in what I, feel like I have targets and I've got a long-term plan for, and not earlier this year. And this is really, I think, the point of this call. Like if we do get on this bull run again, I personally am not going to be in a place where, every loose dollar is in all of these weird coins on 10 different exchanges where I don't even have the passwords, where I'm trying to keep track of like, all of these things that are, some are going up and I'm missing it. Some are going down and I'm missing it. And so just that simplification and that kind of focusing on, being in a spot where it doesn't matter if it's a bull market or a bear market, you're in a place where you're comfortable and you can be patient and you're not going to miss rent.
Yeah, for sure. I mean, it's just, you're going to learn, right? No one's going to, like, contrary to popular belief in YouTube land, you're not just going to jump in and make $1 million no matter how. I mean, you can hit it, right? You can get lucky, but like, you got to move around a little bit in this space. And I don't have a very competent tech background. So for me, it was pretty tricky moving around. And I think crypto inherently isn't that user friendly at the beginning until you start getting used to how it works, so but it's fun. I mean, it's a good time, and I can't wait to, my strategy of buying high and selling low, coming back to 65. So hopefully we get back in the top there again, so I can break even. But yeah, no, it's fun. And the cool thing about the crypto space is that because of the crash or whatever you want to call it, I didn't want to leave the space, and so I pivoted to other projects within crypto that doesn't have anything to do with price, so there's a bunch of technology side of things, and NFTs are cool, and there's a bunch of other stuff that like can keep you entertained in the space, because that's what Wyckoff wants, right? They want you to get bored so they can buy it all up while it's cheap, and so if nothing fundamentally changes in the technology and there's still a bunch of smart people working on a bunch of cool projects, you just kind of got to hold on through these tougher times, I think, and just stay entertained and stay involved, so that when stuff does start to move, you're ready to capitalize on that or make moves on that or whatever you want to do. So yeah.
I definitely agree with you there. And those times when the market is trading sideways, that's when we should really be, fortifying our plans and revisiting our plans and making sure that we are on point for the next time the market starts to move.
Yeah. And I mean, keep score yourself, right? Like if you don't know what the score is, how do you know if you're winning? So you got to be hard on yourself and just tell the truth. Look at the numbers. Like, oh, I got smoked on that one. Like hopefully that won't happen again. But if you don't even know you got smoked, like it's one thing to know that the bank accounts are down, but if you have 3 wallets and you're just kind of guessing like, how much do we have in there? Which was where I was. I had to like go back and catch back up because I was like so greedy. I was just throwing money everywhere, and so you have to kind of consolidate a little bit and come with some stuff that how to execute. I think execution is something you have to practice a little bit to get to a spot where you can execute efficiently.
Mm-hmm.
So, but it's fun learning. It's a dynamic spot.
Yeah, I would say that's definitely a challenge, is having things so spread out amongst wallets and different investments. Now, especially with staking, and you can have stuff on exchanges or you can have stuff in different hard wallets, cold storage. Yeah. Just keeping everything organized. Where do I have all of my assets, and making sure that you visit all of those places, either, the different exchanges or the different platforms, lending platforms that you may have stuff staked out on, and or just like looking at your cold storage wallets and just staying organized.
Yeah, and another thing to realize is decentralized is in all senses, right? Like there's no security, there's nobody at the teller like, no, you can't just trade US Tether for Ether. It's got to be Ether to Ether. And the first time you do that, hopefully it's $30 and not $300. But so there's some like tricks that you like just get the big fingers or whatever, go too fast. You're like, oh no, did I just do that? And like, hopefully you're playing with smaller numbers that you're not like putting yourself in a spot, but it just takes a little bit of practice, I think, and just like anything else.
And I think, part of having a plan, I think, is also knowing your why. And if it's just pure greed, that's kind of a crappy plan. I mean, go sell drugs. I don't know. That's bad advice, but like there's other ways to be greedy. I would say the thing that has sort of changed for me is I'm focused less on just the pure numbers. And, that's kind of where I was. I felt like Gollum in the cave, like, looking at all my spreadsheets, just watching these numbers go up, but I wasn't doing anything with them. And I was in my garage, staring at the computer 24/7. And so maybe having a plan for, what are you actually going to do with this? Are you saving for your kids' college? That's a different thing than like, I'm just going to make a bunch of money and go buy a Lamborghini. Now you actually have fiscal responsibility. I think maybe part of your planning is saying, what am I trying to do that I can't do now? And how is crypto going to get me there? And actually mapping out the steps in the journey to that actual real world experience that you want to have, or the quality of life improvement or whatever. And then you can actually make a plan that is, towards some why that's meaningful to you, and not just the, throwing money, hoping to see it multiply. And then for 9 out of 10 people, it ends up doing the opposite. And my dream for the first half of this year, my friend who got me into crypto in the first place back in 2017, who has done really well because he just buys Bitcoin. He doesn't look at prices. He doesn't care. I call him up like, did you see what the market just did? He's like, nope. I'm, tending my garden. And he has this barrel sauna, this really cool, you put it together from a kit. It's like a sauna in his backyard. And all this spring, I was like, man, I'm just gonna, stack up my Bitcoin. I'm gonna buy one of those. And I never took the money out. I had so many opportunities. I was up, tens and tens of thousands of dollars at any point. I could have cashed a little bit out and put something meaningful in my life, out there in the backyard for people to enjoy. And instead, I just kind of hung on and pittered around. And, I'm in an okay place, but I have nothing really to show for it other than lessons learned. So I think we're kind of coming up at time, but I hope that was useful, depending, on whether you're a trader, you're an investor, you're just an onlooker. I hope that you picked up some, just insight, and we're excited. These normally happen on Thursday, so we will get that schedule back up and running. But for anyone who's new here, we're very excited to have you in this community. Huge shout out to Pete. He's been a big mover and shaker of making this happen, and Bandito and many others who are coming here just because they love this and they want to share their wisdom. They want to share their insight. I think we're really planting the seeds of a cool community, and we're very excited that you're now a part of that. So happy Friday, everyone. We'll leave it there, but go do something fun. Go enjoy the value in your life, and we'll be back in the Crypto Garden soon.
Yoga in the morning.
Yoga.